Hi guys, just a very quick video. I was requested by Phil and Yoxie just to go through again how the spreadsheet is filled in. So I thought I'd just quickly whip through it, show you the key points, and then you've got a bit of a refresher you can always come back to. So a little salute to you, Phil and Yoxie. You start with your front page at the beginning of the year, all right, and you put in your starting balance. Could be whatever, 30,000. It'll pre-populate everything. All right. And this front page pre-populates as you fill in the sheet throughout the year. This little section here is just literally notes. So whatever you're working on at the time, you can put in here. So for argument's sake, you're looking to try and achieve 1% per day. So you can then look at January and you can see whether or not you're achieving your given goals. And then it can move on to the next month and you can put in there maybe, well, I'm not achieving 1% a day, so I now want to work on letting trades run. Give you that extra big profit. So it's all about eye shot and seeing what is going on. Now there is videos on Madness about how to work this in. And when we've done that, there's a video on the compounding plan. Compounding plan is exactly what it says it is. It's just showing you that if you increase your PIP rather than looking to increase your percentage growth, your pot will grow naturally. The wage maker is a very simple eye shot of where you need to be. So for argument's sake, you want a salary of 25,000. Your current strategy that you use produces 20 pips on average per trade. You can now look at this and think, right, okay, what is going to happen? Well, it's going to get me 2 grand a month, 520 a week, 104 a day. How do I achieve that? Well, if I'm wanting to trade twice a day, if I pull this down to sort of get to 2, that's there. I need to be at £2.53 per pip for each one of those trades. And it's just a very quick eye shot as to where you want to be. So if you think to yourself, well, I'm actually at a fiver a point, so say here, that's thick end of a fiver, you will do your trades with just one a day. And it helps you focus and stop you over trading because it's targeting in what you wish. So that's how this side works. This side is just actually telling you what that average will give you based on this. So if you average 20 and you're at 157, you'll get £31 a day, 156, 954 a month, and that per year based on that, which is on this. And if you were setting a goal in here for argument's sake, I don't know, £4,000 for a holiday, and you're still looking at here, so that column there, in order to get your goal, it'll take you 105 working days. That's kind of what this is. It's just an eye shot of where you want to be. All right, so you can use that to help work out your business plan. And then you just fill in the sheet as you go. As you see, the balances pre-populate right the way through. So if you start here in January, for argument's sake, the way this works is that your starting balance, the current balance, the gross P&L, and it's called gross P&L because that is the gross, because sometimes you will see the balance looks slightly out of whack, and that's because you put your interest and your service charges here, okay, and it'll work it all out for you. Your percentage growth or loss, how many positions you've taken, and your win rate. It'll work out your average pip and your average win. If you are compounding your stake, whether it's you're looking to get it up to a 5 for argument's sake, but your account balance won't take it, you have to build it. So in here, you could say be on 80p a pip, and it's telling you that the next pip size, if you've achieved your little standard, for me, if I achieve a trade of 10 pips or more, I will move up the next trade. Okay, and it'll increase it by 5%. You can change that to whatever you want. All right, and then what it also does is it works out how many trades you need to achieve to hit your daily target, which is set up here. And what you could do, you could say I want to achieve 1.5% a day, which will tell you that it's 15 quid. That's what you need because it's worked off this. And at your current bid size, you need 19 pips. So you're looking at, well, it's telling you there, 2 trades. Just to keep things a little bit in focus again, if you tap that number in there, it kind of tells you what figure it's going to be in there. That's telling you what you need to be ending at the end of the day. And then this bit is as easy as it gets. You just drop the date in, drop your balance, your risk tolerance. Now this is working out how far you're prepared to go, your hard stop. So if you say it's 2%, it's telling you what the monetary value is of that, because I think it's important you understand not the pip count, what you're risking, but actually the money count that you're risking. So in this case, it's £20. And if you put in your bid size here, it'll tell you where your hard stop must be at a maximum. And what you would do at this point is you would look at your chart and you will see where your stop needs to be. And if your stop needs to be 50 pips, you know this criteria at the moment is not good enough. You're putting yourself at risk. So you've got one of 2 choices. You either don't take the trade or you adjust your bid size. If you adjust that down to 40, it means your money risk is exactly the same, but it's allowing your stop to go in the right place at 50. So I hope that kind of makes sense. Because you must let your trades breathe. Then you put in your profit and loss. So once your trade is complete, let's for argument's sake say you won £5, that will go in there. It'll tell you you've won. It'll tell you the change to the account, your risk reward, and exactly how many pips, points, ticks, whatever you want to call them, is made. On this side, you can pre-populate this before you put your P&L in, but it'll be just your market, USD. Now the trades, because I break my trades, I might open up sort of 3 positions at once, you know, so it'll have a target of 10, 20, 30 sort of thing. I just put a kind of code in here, so it's the first trade of the day, and it'll be take profit 1. And then the next broken trade would be TP2, TP3, and I would just have 3 lines in there. Am I going long or short? Would go in there. Pop in my mood, because I think mood is important. Because if you find you're losing a lot and each time you come to this you see that you're tired or you're agitated, it's telling you to stay out the market when that condition is in your mind. So if you are knackered, just stay out because you're clearly making mistakes. And then a little thing as to why you took the trade in the first place. Pushing the Bollinger Band or bouncing off a level, whatever. And that fits in there. And it literally is as simple as that. Now, if you are opening up multiple positions, you just copy, you can drop it into there. Now, at risk Now this one here, you might have made £4 just there. But you'll sometimes see me have a 0 in the risk. And that's because I'll have pulled it to risk free. So in other words, the trade has gone my way and I've just pulled my stop down to risk free or break even, whatever you want to call it. And then it just populates up here and lets you know what's going on. And for argument's sake, we lost the next trade. So we'll just put that in there. Same criteria, doesn't really matter. But we lost £7 there. Again, it's just pre-populating the other way around and it adjusts your win rate. And you just do that right the way throughout the year and it'll populate as it goes. If you ever see something like this, just double click there and it'll just widen out the column. And if you look on the summary, it starts filling it all in. It tells you your average pip size, your average pips, like how many pips you've won, balance, increase, etc, etc. So I hope that kind of makes sense. It was just a quick refresher. I know I've done them before, but that's how you fill the sheet in. Okay. So as always, guys, do what you love and the money will follow. See you all in the next one.